Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Dennis Dick, and we have Gene Munster on the line. He's a senior research analyst for Piper Jaffray. Gene, how you doing this morning?
Doing great. Thank you for having me.
Want to give a quick shout out to my boys there at Piper Jaffray. Some great gentlemen you got working for you there. I just want to say hello to them and go blue. But let's get right into a really good question here, Gene. And, you've been covering tech stocks since 1995, and you've seen the market go through a number of bubbles and bursts. How do you feel about the current bull market? Is this a potential bubble?
I don't think it's a bubble. I think it's poised for a pullback. When I think of pullback, I think of 5 or 10%, but I don't think we're going to get back to the 50, 70% meltdown that we had in 2000. And the fundamental reason is that the companies that are now kind of leading the way have actual earnings. Back in 2000, those companies were a lot of speculation and really didn't have much in terms of revenue. It was all based on kind of eyeball valuation. So I think that the playing field is much different today than it was 15 years ago. So whenever you have a big run like this, I wouldn't be surprised for a pullback, but if you believe fundamentally in what these companies are doing, I still think there are reasons to own these stocks.
So from a valuation perspective, you're a lot more comfortable than maybe back in 1999 when we were at NASDAQ 5,000 for the first time, and the multiples were all at a ridiculous level. So you're more comfortable maybe from a valuation perspective this time?
We definitely are, and I think that, again, it just comes down to there's more substance, there's more earnings this time, so the valuation gets more encouraging, and I think that that's kind of the reason. I think you have to look at, do you believe in these themes that the companies are going on? Obviously stocks, you got to look at what's going to happen in the future, and I think each of these companies is varying degrees of optimism for the future, but if you believe in the future, they've got earnings to sustain the stock, and I think that there's some exciting themes that they can really propel these shares higher over the next year.
Let's jump into Apple here, Gene. You've been all over this for years. I've watched you, go on CNBC and say you got to own Apple. 5 years ago, you were saying you got to own Apple. So you've been all over this call. And I got to get your thoughts here. Just first overall on Apple, it's got a $700 billion market cap now. So obviously it's had an incredible run here. Do you think the run can continue?
I think it can, and for two big reasons. First is that the addressable market is shifted. It's probably bigger than what most investors think. And let me just give you some quick perspective. Typically, Apple, when they launch a new product, their market share goes up and then it declines right away. And I think this time, given the fact that they have screen sizes that compete finally with the larger form factors, which are more popular, that could allow them to maintain their market share or not lose as much market share. In every 1% market share gain that they have, and right now they have about 20% market share, every 1% gain that they have adds 15 million units. So that would increase their overall units by about 7%. I realize there's a lot of numbers there, but the key takeaway message is this. If you think that the iPhone is just more competitive because it's a bigger screen, then you should be optimistic about market share gains, and that can have some wicked positive impacts on the model. That's phase one. Phase two is they got other stuff coming. Obviously, we have the watch event on Monday. That's going to take some time for the watch to get some momentum. But beyond the watch, there's other things, including this light field, near field. It is a kind of what's going to replace the phone ultimately. It's something that people haven't talked as much about. And then you get self-driving cars and television, and so there are catalysts left with Apple. So despite the massive market cap, there are some meaningful reasons why the numbers can move higher.
Carrying on with the theme of that special or spring forward event, Apple TV, it's been rumored for years. Do you have any take on that? Will there be any movement in that direction?
We've been part of the fueling the rumors here as we've closely watched this. Apple has been working on something. The content has been a hang-up on this. So Apple wants to create a content experience that is like nothing else. And so to answer your question is that we still believe Apple's actually working on a panel. The timing is, we're guessing it's in 2016. Apple tends to focus on one product at a time, one new product, and that would be the watch. But our money is that they are going to do a television. the company, Tim Cook, has been evangelizing this better TV experience, significantly better TV experience. And typically when they evangelize something, that means that there is a product coming. He did the same thing in wearables and the watch followed. They're doing the same thing in TV right now. And so I think there is room for optimism around the TV, and we're expecting it in sometime in 2016.
What about this self-driving car that you just mentioned, Gene? What are your thoughts on this?
I think at a high level, we'll first take a step back, because Apple has a project called Titan. There's about 300 people working on it, and it's for their electric or self-driving car initiative. The part that we don't know is how long away this is and how serious they are. Our bottom line is that I think that this was probably leaked by Apple. They probably did some things to get this out there in an effort really to get investors comfortable that there's big things that the company is going after longer term. That's good for the multiple. So I think that the nice thing about the car at this point for Apple is that you can sit back as an Apple investor and know that if times get tough with the stock, that this theme about the car is going to reemerge. And it's a big addressable market. And so I think it's less about the impact of the model and when it's going to be out, and it's more about a psychological perception that Tim Cook is really innovating, and this is a good company to bet on innovation.
Let's go into another big company in the space, Google. And a number of analysts are concerned that Google may get increased competition in search from Facebook and or Twitter. What are your thoughts here? Is there still upside in Google?
I think Google's a great story if you look 1 year and beyond. I think Apple works over the next year because of the market share gains. I think Google, you have to have some patience. The reason specifically about the Twitter and Facebook is that from their perspective, they're really not going to compete with Google in search. If you look at the total number of search queries between those two, it's less than 1%, far less than 1% of where Google's queries are. And the way the technology works for Google is the more searches that they process, the better they are at processing the right search. And I would just say this, go and try Bing or Yahoo search, and that frustrating feeling of not finding exactly what you're looking for, the reason why you have that is that Google just has done more searches and their algorithm is more intelligent at getting you what you want. Facebook and Twitter won't have that opportunity. And so I think that that's something that investors are concerned about. We don't see it as a long-term issue. Google has some other near-term issues that we can get into that probably make the stock kind of hit or miss in 2015. But if you want to invest in a company for kind of 1 to 10 years, Google is the best company to invest in.
So you like it long term, but short term, what were those issues you were going to mention?
The biggest is Safari. Right now, Google has a deal where they pay for the default place in Safari. So if you have an iPhone or a Mac, or you use the Safari browser, when you do a search, it defaults to Google. That deal is up in the air whether or not Google is going to be awarded it or re-sign that deal. If Google loses the deal, and that's kind of the expectation, hard to say what's going to happen, but let's assume that it goes against Google. If they lose the deal, it has a negative 3 to 5% impact to their revenue in 2015. So it kind of messes up the numbers in 2015 and creates some awkward growth numbers for the next year. So that's the negative piece. The positive is that if they lose it, they're going to gain the share back. And we've seen this in other parts of the world when there's been an incumbent share displaced. So people will switch initially because they're going to be forced to, but then they'll quickly switch the browser back to Google, and Google will gain that share back. And so that's why it's a near-term negative, because the numbers could come down. But longer term, we all know we're going to switch back to Google, and so it's actually a longer-term positive because they don't pay Apple anymore for that. That's probably the biggest near-term risk that investors are waiting to kind of find itself out.
Is there any possibility that Apple could come up with their own search engine?
There is. I think that I would put it, there is other things that they need to do beforehand. For example, before they do search, they just need to improve the points of interest in maps. For those who have an iPhone and have been frustrated with Apple Maps, one of the reasons is that it's weak in terms of points of interest. The data kind of that says this restaurant is here or this sporting event is there. So I think there's some some more basic things they need to do before they get into search. So I would say it's unlikely.
What about Amazon here? This stock has been on a tear for the last, well, really since the earnings report, and the stock gapped up from 300 to 340, and it's just been climbing, climbing, climbing here. We're actually starting to approach your all-time highs here in Amazon. What are your thoughts on Amazon going forward?
I think that over the next couple quarters, this is surprising, but I think that even though it's had a massive gap up, I think it can still move high over the next couple quarters, which is hard to believe, but the reason we believe that is we think the biggest driver in the stock is changes to their gross margin, to their operating margin, to their overall margin structure. If they have upside to margin, the stock is likely going to go up despite its high valuation. And specifically on the last earnings call, the CFO had strong language that suggested for the first time the company is focused on margins. And that set the stage for them to improve margins for 2 consecutive quarters or 3 or throughout the entire year. And if that happens, the stock is going to go higher. A lot of investors that we talk to think that this is just a head fake, that it's had its move, and we've been through this before where the stock rips up on good margins and then comes right back down. But I would point out that in the past when that's happened, the company hasn't laid the groundwork. The margins are going to improve sequentially throughout the year. This time they're doing that, and we think that that change is important, and that ultimately will lead to higher margin and higher stock price.
Let's move on to Yahoo here. Stock, some rumors earlier in the week that Alibaba, rumors only, may be interested in it. It's had a hard time since the spinoff. What's your take on Yahoo?
I think you really have to cover Alibaba. That's Yahoo. Unfortunately, we don't cover Alibaba, so it's hard for us to get a good read on that piece of it. But we do cover Yahoo. Yahoo's core business is struggling. The good news for Yahoo investors is you're really not paying anything for the core business, and so you get kind of optionality value to it. So our general thinking is that first thing is you really have to understand Alibaba, and I think longer term Alibaba is in a good position. And second is that I think you have to realize that you're really getting the core business for free. And so I think that this has been a little bit of an overreaction with Yahoo. We do feel that the core business is probably in a difficult place longer term. This is one of those companies like Yahoo and eBay could face more struggles in the future.
Gene, one question coming from the chat here, and Jays is asking from the chat. He says he owns shares of Apple, Facebook. I don't know if you cover Microsoft, but he says that one too. He says he wants to add more dollars to each of these companies, but which one would you, if you were to add to Apple or Facebook, and I don't know if you can talk about Microsoft, which one would you add to, and how do you like them over the next year, or the next 3 years, or the next 10 years?
Between Apple and Facebook, I think over the next 2 to 4 quarters, I'd pick Apple based on what is going to be what we think this potential improvement in market share. And so Facebook has a lot of optimism, but the real catalyst for Facebook aren't until 2016. They're going to start to more aggressively make money from Instagram in 2016, and so that's kind of the catalyst there. So in Apple's case, the catalysts are a little bit earlier, so we don't cover Microsoft, so I just kind of focus on those two. I think the other longer-term challenge with Facebook is that social is something you got to constantly reinvent, and so that kind of creates a little bit of a difficult challenge to getting comfort longer term. There is one positive wild card on Facebook, and that's ultimately this Oculus business, Oculus Rift, which is this virtual reality business. It's going to take a few years to have an impact, but that could be significant. So to answer the question, I would say I would put most of the money into Apple over the next year and then kind of reassess at the end of the year where things are at.
Do you think there's any issue with all these ads that are now popping up on your streams? Like, you're seeing them start to show up in Twitter, but in Facebook, go back 2 years ago, you weren't seeing any ads in your stream, and now you are seeing ads. Do you think that can turn off the user base as more ads show up into those streams? Is that an issue?
It is an issue. They've been slow at showing up those ads. As you said, they are slowly increasing that, so that's starting to create some frustration for people. But in general, Facebook still they under monetize ads. They still, their ad coverage is low relative to other companies, and it's about half or a third of what that is. So yes, it's increasing, but it's coming off of a low base. They're hypersensitive to not making people feel like they're seeing too many ads. One piece that Facebook has been exceptionally good at is targeting ads and having creative, entertaining ads. And so sometimes when we survey Facebook users, they talk about having an ad that they actually want to see. And so it doesn't feel as intrusive as an ad that you don't want to see. And so I think that they can increase their ad coverage if they can keep the creative and the targeting better. The basic idea is that if you're in the market for a sports car and you see an ad for a sports car, that doesn't feel like an ad. It feels like education or entertainment.
We're on the line with Gene Munster, Senior Research Analyst for Piper Jaffray. Getting back to the whole search, and Dennis made a comment, we're prepping for the show, that he does a lot of his search on Twitter now, and I know it's not one of the stocks that you cover, but, Twitter, Facebook, Google, Apple, there's going to be winners and losers. Any comments on Twitter?
Well, I think Twitter is in a unique place because they're really becoming branded around kind of news flow. And so I think that there is a vertical around that, and I think they'll continue to mine that. Just because someone else can offer, like Facebook, for example, offer the ability to do something similar, doesn't mean that that is going to be a successful kind of vertical for them. So we see Twitter as a company that is kind of well-positioned to capitalize on that real-time news flow vertical. And ultimately, that's going to be appealing for other companies, whether it's Facebook or Google or Apple potentially. This flow that they have in a kind of a very vibrant user base, I think, is going to be attractive. So I don't have a good sense of how the numbers play out from a quarter to quarter, but I do have a sense that this is going to be a valuable internet asset for bigger companies.
Gene, I've just got a general question for you. We know you cover the fundamentals of the companies very well. Do you pay any attention to the technicals, the charts?
We do. The way it works is that when we kind of have a research call in the morning, we have a technical analyst, Craig Johnson, who's been doing it forever, and he'll go and give us some insight on kind of the technical piece of it. So, for example, we recently had some longer-term positive comments on Google, and I'm told from Craig that that chart looks good, but that's kind of how we approach the technical side.
Okay, so you're not wearing it on a day-to-day basis. Gene, you've been in the business for a while. You've adapted your own style. Has there been any one person or one book that's had the most impact on your career in your style of analyzing stocks?
Well, I'd say probably one of the most impactful people is one of the guys I work with, Doug Clinton. He's worked with him for 8 years. He's the smartest guy on the internet, and so I think it hasn't been a book. I've just learned a lot from him about the mechanics of these businesses. So I would give Doug a lot of that credit.
Okay, we've been on the line with Gene Munster. He's a senior research analyst for Piper Jaffray, joining us on Benzinga's pre-market prep. Thanks a lot, Gene. What a great interview. We hope to have you on again.
Thanks a million. Have a good day.
Thanks, Gene.